Behind the Ticker is brought to you by UX Wealth Partners. If you're a TAMP user and you're sick and tired of the legacy technology they are run on and you want more customization and flexibility, as well as a AI-driven model marketplace, UX Wealth Partners is your destination. On top of that, they have institutional trading. So if you are an ETF issuer or an SMA provider looking for outsourced institutional trading, UX Wealth can also be your destination. So check out uxwp.com to find out all the ways UX Wealth Partners can help grow and make your practice more efficient. Welcome to Behind the Ticker. Today we have on Sylvia Jablonski. She is the CEO and CIO over at Defiance ETFs. They have a variety of different product suites over there, whether it's levered stock, single stock ETFs, income products, as well as thematics. And today we are focusing on their quantum computing ETF, ticker QTUM. We talk about why that space is exciting and how quantum computers can change the world and why it's an exciting place to maybe look at start investing some of your capital. Now, one thing to note, we did lose about the last 20 seconds of audio, so thank you, Riverside FM. However, all you really missed was some thank yous and their website, which is defianceetfs.com. So without further ado, please enjoy this episode with Sylvia Jablonski. Hey, Sylvia, welcome to the show.
Thanks so much for having me. Happy to be here.
So before we get started, why don't you share everybody a bit about your background and how you eventually decided to kind of start Defiance and break away?
Yeah, sure. So my background is pretty much, econ finance from the start. I always had an interest in markets and investing, even like pre-high school time, and always kind of knew I was going to do something related to markets. ETFs weren't so popular back then, so it wasn't a job that I necessarily thought about. When you're kind of in university, you're thinking about like which banking program are you going to get into, and so I started working out at the banks and doing Delta One sales trading and learned about swaps, equity derivatives, things like this. And I was covering the different ETF issuers and hedge funds for their different swap trades, and so. I think it was like around 2007, 2008-ish, which was like the heat of the financial crash, really, where, I was really working a lot with swaps and kind of like pro shares and direction and things like that. And around that time, I just like through having the knowledge of swaps and ETFs and stuff like that, I got the opportunity to join Direction ETFs, which is the levered inverse ETF issuer. And I worked there for like a decade or so, a little more than that, actually. And while I was there, Matt Belsky, who's the, original founder and chairman of Defiance, worked with me. So for, years, we travel around the country doing education on ETFs, capital market stuff together, trying to get people to buy the ETFs, hold the thematic ETFs, trade the levered ETFs, all that kind of stuff. But we just got to know each other over the years and had developed this awesome kind of like rapport and trust and relationship. And we always, thought about doing something together. He went and started Defiance, and shortly after, I joined him at the firm. And so I guess it's been around 4.5 years or so since I've been there. And it's, to your point, like it is taking a plunge, right? You go from a big kind of stable institutional player to a startup. And it's just been an awesome ride so far.
That's great. So before we get too much into Defiance, I always like to ask people, what do you like to do when you're not sitting behind the desk? Any hobbies?
Oh gosh. Well, we were talking about this a little bit offline, but I have a 3-year-old and a 5-year-old. So like my hobbies are kind of hiding in the closet, let's just say,
Yeah.
But just avid tennis player. I mean, I absolutely love playing tennis. I love going to the US Open. I love watching tennis, kind of all things tennis. And then, if you go down that list, I also like ping pong. I also like pickleball, in general, racket sports, but other stuff too. I mean, I kind of have like a knack for foreign languages. Always like to travel, and big reader too. But my kids are kind of the hobby. They take over.
For sure. That's the US Open is on my my bucket list of things I want to do. I've had a buddy
Oh,
who
you
went.
got
He said he loved it. Yeah,
if
it
you
looks
go play
amazing.
tennis or like think, like watch tennis, you'll get so into it. I mean, it's just so much fun to watch, and it's just become this cool, like, I don't know, it's changed. I've gone every year, like, for as long as I can remember now. And it's also turned into like this cool New York City, like celebrity athlete spotting, fashion event. And yeah, and the tennis is getting really good again. Like after all the greats kind of started to fade off, like now the younger players are getting to be, super exciting and competitive to watch, and so much fun. You got to go.
Yeah, it's definitely on my list. And I never was into racket sports, and then for whatever reason, like I started watching all the majors, and now I think it might have been to that Netflix series, and then I really started to get into it, and now I watch like as many matches as I can. But definitely on my list and something I want to do. So let's talk about kind of Defiance as a whole. You have a pretty diversified lineup of different ideas, right? You have an income suite, you have a thematic suite, you have a leverage suite. So can you kind of talk about what goes into the decision of, what are you going to launch? Where are you going to launch? And as you kind of come up with new product.
Yeah, sure. So in 2018, the market felt sort of like saturated, and a lot of the ETFs that were coming out were similar in style, similar in theme, and I think around that time there was this kind of evolution of different types of thematic ETFs that hit the market and kind of built their spot in investors' portfolios and picked up some traction. So we started out with 5G and quantum. So now it's interesting because now there's been this like ChatGPT moment, but we were thinking about like in 2018 and 2019. Those were the conversations we were having. We were like quantum computing, machine learning, AI. Like this is going to be the next big thing. It's going to happen next year. We were a little bit early for sure. But we just kind of like really believed in that theme and just saw that everything was just kind of getting like automated. There were all these conversations about data, what to do with data, how to make, like Facebook changing to Meta. We kind of thought about that. Like, well, what does that all mean? And, so I think, we had a couple of thematic ETFs that were like very timely and, came when the market needed them. So 5G, ticker's now 6G, because now we're kind of thinking about that next level of communications with like Starlink and things like that. But when 5G came out, it was one of the hottest topics in the market. You had Howard Jonas talking about it on CNBC all the time, and then COVID hit, and we were talking so much about like low latency, the ability to have connectivity and work well, work efficiently in different places and things like that. And so I think those two ETFs really put us on the map and made us a company. And then, we kind of started going through the different sectors and saying like, how do we replicate this? If 5G is the future of communication, and quantum is the future of technology, like what is the future of of energy and efficient natural resources? Could it be hydrogen? What is the future of travel? Like what is really travel and OOTD and things like that. And, we kind of came up with different ETFs to represent the themes. And then, we realized that the market started to kind of go a little bit, not stale, but it seemed like the hype around thematic ETFs was dying. And so we started thinking about like, well, what's next? Like, flying taxis or is it going to be driverless cars, whatever it might be. And I think, with some of the tech pullbacks that we had, first you had COVID, right? And then you had 22 tech pullback, and we were all tech. And so, our whiteboard moments were like, okay, we need to diversify the product suite now, right? We're so heavily geared towards tech and AI, which is amazing, but we need something else, right? So enter the enhanced income product suite. And so, we realized that there's this huge interest in index-based exposure with large monthly distribution payments or weekly distribution payments that investors are seeking. And so we launched the enhanced product suite, like the QQI, IWMY, JEPI, and then the target income funds. And those grew right away. We got lucky in terms of, the awareness of those products and the amount of interest that came in right away. And then we continued to build out products in that suite because the market was asking for it. And then we saw, what else does the market like? And the market really, really liked single stock Nvidia. And, and we thought that while a lot of people had filed for single stock levered ETFs, not a lot of them had actually hit the market. And the ones that hit the market, kind of did okay. But we thought, well, there's something else. There's something else missing. There's a couple of names that people whip around all day that are kind of like volatile enough for day trading and interesting enough for people to trade short term. And so, we launched MicroStrategy, Broadcom, super microcomputer, and Lilly in that space. And that kind of put us on the map as a levered fund. And so, I guess like on the most basic level, we try to, and I know you guys do the same thing too. Like we all try to figure out you have your brand and your DNA, of course, that you want to stick with, but we are big on what is the market telling us? And we've launched a lot of products that didn't make it, right? Like we had an EV ETF, we had an inverse crypto ETF way too soon, right? It didn't trade a penny, and now these things have billions of dollars in it too. So, we try to listen to the market, try to get the timing right, and we win some and we lose some, but luckily we've won more than we lost, so it's been pretty good.
Let's stick on those single stock levered theme for a moment, yeah. Right? You mentioned MicroStrategy. That's kind of also a little bit of a crypto play in and of itself. Yeah. So you actually recently filed to increase the leverage. I believe it was 1.75. It's now you're filing for 2. Yes. So like, what's the internal dialogue around like turning up that volume just a little bit and for the increased leverage? Is it just to make the product a little bit spicier? Is that what people are asking for? Like what's the thought process around that?
Yeah, I mean, the product it's probably one of the most successful ETF launches of the year. I mean, it's certainly the most successful ETF launch for us. And, our biggest day was actually just the other day on Monday. I think it traded, close to 100 million. So there's just so much interest in this, and there are so many people in it and trading it, and, market makers, institutions and whatnot. And they've just said that they'd be interested if we could get it a little bit higher, they'd be interested in seeing that. And so we're going to do that. Ask and you shall receive.
Yeah. Hopefully you receive,
Yeah. Hopefully you receive. True. Fair point. The caveat there and disclaimer there is, of course, we seek regulatory approval to do it. So.
Yeah, that's right. We have to make the compliance people that will listen to this happy.
Yes, exactly. No guarantees in life. These are, intentions.
Yeah, it's great. So actually, let's stick on, so I think you kind of touched on this, but I'm always curious because I've talked to other issuers that, put out single stock leverage or inverse. Are you looking for like what's being traded? Or are you looking for what's being, or a stock that's popular? Like what goes into the decision of saying like, yes, we want Lilly, or yes, we want MicroStrategies? Can you talk about that a little bit?
Yeah, I mean, I think you hit the nail on the head. It's kind of all of that. So you look at, like what are the most popular stocks that are also the most volatile stocks that, also have the highest level of volume. And that's kind of been the secret just in my career. And again, like, Matt and I come from Direction. So like we've been doing this a long time. All of the products that we tried to get really cute with and we thought were phenomenal ideas, just like they would close and not trade. But, and even thematic leverage products like didn't do that well historically. But all of the products that were just kind of like pure play sectors, volatile sectors, they were the most popular, like leveraged semiconductors, levered tech, levered, gold miners, things like that. And so I think, bar non-semiconductors are the most popular stocks this year. They also happen to be very volatile. So when you have a 2x daily fund, those, the underlyings move, and it's kind of the juice that a day trader wants. And that's the key too, right? Like we're catering to sophisticated traders who, they make a decision every day as to whether or not they're going to hold it another day. They're often day trading it. They're holding it for shorter periods of times, or else, if they hold it for a longer period of times, they have a hedge, they have a rebalance strategy, whatever it might be. So, like I think with that crowd, it's very much that vol kind of begets volume.
Yep. So let's talk. We're here actually to talk about quantum, QTUM, which is your quantum computing thematic ETF. So at a very high level, can you talk about what that fund is really trying to accomplish?
Yeah. So, this was, as I mentioned before, like when we thought about launching this fund, it was meant to be, our take on what is machine learning, supercomputing, and AI. And so we worked with Blue Star on this and created this index. It's called, essentially like quantum computing and machine learning. And within it, you have like all the different sectors that make up everything that goes into AI, machine learning, and supercomputing, right? So you'll have everything from all the semiconductor companies, you'll have like MicroStrategy in there, Nvidia in there, but then you have, like the Hewlett Packards in there, the IBM is one of the top holdings because they're big investors in quantum computing. And it's just basically, looking at the broad-based sectors that touch machine learning, quantum computing, and AI, and picking stocks that have or can attribute 50% of their revenue or, commercialization or like research around the idea of supercomputing, machine learning, and AI. And so we construct this index. It has 72 names. It's equal weighted, kind of like runs between rebalances, obviously. But yeah, you're really just getting the top names in class of pure quantum computing, AI, and machine learning.
So without us like trying to figure out what the world's going to look like in, 5 or 10 years, like what is so exciting about quantum computing? Why should people look at this as a theme that is exciting and investable and ripe for growth?
Yeah, I mean, I think quantum computing can transform all of these like things and evolutions and innovations that we're all talking about right now, right? Like you have cloud computing, you have data mining, you have the chat bots, you have research and data being done for drug companies. So quantum computers essentially, allows data to process in two different states, and it allows this to happen very quickly, faster than, any other traditional computer can do a computation. So if you just think about things like, biomedical research, like cancer research, all of this data has to be processed and it has to be kind of parsed and it has to be delivered. And so if you have a computer that's working, I just kind of like know a lot of people who do this for a living, right? And they might do cancer research. And so they'll kind of go out to, a huge computer in Minnesota, and it'll take like 7 days to process the data that they need in order to, to do whatever particular research thing you're doing. And a quantum computer can do that in like a second, right? And so I think, one of the issues and like why it's kind of not mainstream now is it's still in R&D, right? So the computers have been known to, like make errors or they're trying to kind of like sort out what the outputs will be, but they're getting closer and closer to this. And now there are systems like, Microsoft has an algo that helps reduce the amount of errors and things like this. And so what I think will happen is that with AI, you need data and you need that data to produce the correct information for the query that is being asked. And then if you, on top of that, have a quantum computer that can work in two different states and do it very quickly, that all becomes more efficient. And then it trickles down to like, creating smart cities, aerospace and defense, like having the ability to have more precise targets, right? During wartime, it's communications, it's 6G, it's making the chatbots more efficient. It's having customer service, automation, robotics, things like this. I think, quantum computers can really like change all of that, make it kind of like work faster and more efficiently.
Yeah, of course. And so you touched on this, at a kind of a high level, but the fund itself is looking at a third party index. Was it Blue Star? I think you said
Blue Star. Yeah.
Yeah. So what are some of the things that it's kind of screening for in order to get inclusion in this index? Like what kind of states have to be met in order for a company or a company to be included in quantum?
Yeah, sure. So it's basically like the leading global companies in research, commercialization of anything related to cloud computing. So that could be like high powered computing, data connectivity solutions. It could be cooling systems. It could be, companies that specialize in like perception and collection and management of data used in machine learning. It can be semiconductor companies that invest in supercomputing and high speed computing. And basically, these all sound like foreign things, I guess, but you'll recognize a lot of the names in there, right? Like I said, you have like an HP in there, you have an IBM in there, and then you have these kind of pure play quantum plays like an IonQ or D-Wave. And you have, like the visualization types of companies in there. You have names like Rigetti Computing in there. And so it's really capturing like the top 70 names that are most concentrated and highly dedicated to this kind of transformative supercomputing technology.
And is there any, does the index do anything in terms of prioritization of those companies, or are you equally weighting everything?
Yeah, we're equally weighting. There's they're subject to a liquidity overlay, but they're equally weighted. And, like the reconstitution is on a semi-annual basis. And so, what's good about this too is that you have access to these small cap, I'm just thinking about like the rate cut yesterday, right? So this ETF is great because you have all the large caps in there, like the Nvidias and the Googles and all that. Like they're kind of like a ballast for the fund, right? They're kind of the companies that have the largest amount of money, well capitalized, and they're investing in quantum computing. But then you have like the actual pure plays that are more along the lines of like a small cap company and are going to grow into the space. And particularly, with rate cuts going a little bit lower, we're talking about small caps. You get a little bit of that small cap flavor in this too.
So you had mentioned right now the fund has about 70 names in it.
Yeah.
Is that a target you want to be around that 70, or could you see as more companies are coming out, kind of that number edging up as there's more people in the space?
Yeah, I think it could edge up if there are more names in the space that meet, the different liquidity requirements and things like that. So I think if you get new quantum players, and there's a couple of them out there that definitely, like D-Wave is a recent inclusion. That's not a name that was in there between 2018 and 2023, really. That actually just popped into the index now, right? And that's a pure play quantum computing company that's been around for a while, but just kind of wasn't liquid enough, right? Now they're growing and advancing and things like that. And so that gets picked up in there. And then, we're always looking at the IPOs in the space and, just seeing if they fit the index methodology. And so, yeah, it could change.
Are you finding within the index any country tilts, or is it a lot of it domestic here, US?
No, there are definitely tilts. It's a global basket. And so, you kind of have, you definitely have some Japanese exposure, China exposure, US exposure. Those are probably the top three right now in terms of international exposure. But yeah, it's definitely a global fund.
Sure. So the $1 million question is, you're sitting across, from an advisor. They've got an already diversified model portfolio. Where are you recommending that they use quantum inside the portfolio? Where would you sleeve it?
Yeah, so the way that we see advisors use it is, some of them use it as like a satellite allocation, right? For most advisors have like 5 to 10% of their portfolio where they're either, picking like a flavor or a spice or thematic ETFs or levered ETFs or things like this, and or alternative products and things like that. And so we see them either putting it there or as a complement to their tech portfolio. So wherever they've kind of got broad-based tech allocation / semiconductor allocation, that's where this ETF goes.
Got it. So let's go back to Defiance. I'd love to pick your brain. You guys are 4 people. We're 5. You started in 2018, so you're fairly new, and you're still small and scrappy. So, kind of, there's a lot of new issuers hitting the market that kind of fit this bill, and you guys have had a lot of success. So, can you talk about your experience over the years, and maybe any advice you'd give to those like small, scrappy new issuers to help them get to scale?
Yeah, I think we've learned that we have to be relentless. Like we would have a good idea and we would, kind of sit and think on it and really kind of, suss it out and debate back and forth whether or not it's a good idea. And then some issuer would launch it, it would have $1 million and we missed the boat, So I think, like speed is your weapon. For sure. So I think speed and being relentless about scouring the market, what's missing, what isn't out there, what is out there. I think really giving up on like egos or anything that has to do with like, I thought that was a great idea and it didn't work. It didn't work, close it, move on. Like when you're a startup company, and people might criticize this comment, but I think that when you're a startup and you're very focused on balance sheet and you want to build a profitable company, both for your investors and for the people who hold your products and for yourselves, you have to cut your losses, right? If an ETF comes out and it's been out for a year and people haven't traded a share of it, you have to kind of close up shop as a startup and think of something new. I think bigger issuers have a little more leniency in that stage. So I would just say, be manic about watching your balance sheet, speed. If you have a good idea, bet on yourself, get it to market, and being relentless about products. Like we had a product that was, not performing well, and we changed the methodology. So I think just always trying to, make sure you have the most efficient versions of your products out there, cutting your losses, managing your balance sheet really well, and just being relentless about knowing that your competition is at your heels in the ETF industry.
And how do you guys think about, distribution and marketing? Because again, being small and being balance sheet conscious, marketing and distribution is expensive. So,
yes.
How have you gotten creative, or how have you, because the Defiance name, when I got an email about having you on the show, I mean, like I knew the Defiance name, right?
Yes.
And so can you talk about how you guys really focused on brand and how you worked on kind of marketing and distribution early on to get that brand recognition?
Yeah. So I don't know if a lot of people know this, but we consider ourselves, experts in marketing, and the way that the company is structured is you have Defiance Holdings, which owns Defiance ETFs and Defiance Analytics. So we built our own marketing SaaS company, digital marketing, our in-house advertising, in-house distribution, AI distribution. We've really built it in-house. And so around COVID, when, you're a startup and don't have any salespeople that can go out and see anybody. And to your point, we don't have budget. We can't spend money on ads and marketing companies and PR companies and things like that. We found, the best tech and marketing expert, and his name is, Jacob. He runs the marketing company. And, Matt tasked him with basically building the best and most robust marketing and distribution platform and company that would market our ETFs. And so we started, to your point, we started having success with getting our brand out there. And then other ETF companies would call us and say, like, how on earth how are you doing this? Like, you can't possibly have any money. You're so small. You have like 2 or 3 ETFs. And then they offered to hire us to do their marketing. And so, we do marketing for some of the top ETF providers in the marketplace right now. And that ended up turning into a business. And so we separated it out because it was just kind of under Defiance ETFs originally. We separated it out now. And so, we have our own marketing company. We do marketing for ourselves and we do marketing for other ETF issuers, other, massive asset managers.